too much cars, too much paper, right? You guys hear me? Anybody in there? Let's see. Why nobody join here yet? What's going on, Timmy? Can you hear me? My thing's lagging. It's saying nobody's in here. I can't even see anybody in here, so you guys might need to talk. I was talking to the YouTube. There you go. We're gonna go over Netflix earnings, bro. Y'all see this shit? Everybody hop up on the YouTube so you guys could, you know, get this. Y'all gotta get active on this. You know what I'm saying? What's up, man? Y'all see Netflix? This shit wild, man. I didn't even think Netflix was this high, honestly. Oh wow, Facebook took a little poop off of it too. Yeah, everything. So we'll talk about that. It's about $51 down now. I think the conference call is gonna start in like 10-15 minutes. So that's gonna be interesting to see what happens. But I feel you, man. It's kind of crazy. What's up, Jamie? What's up, Elias? Flowmans. Are you gonna make a trading product? What do you mean? Am I gonna make a trading product? I actually have a product, but I'm gonna give it away for free, actually. OG Swank, what do you think about that? I'm working on something for trading. I want to make a free trading course. What do you guys think about that? When do you jump in on those Netflix calls? Maybe tomorrow, but that's gonna depend where the implied volatility's at. So look at, he's like, eyes. He said free trading product. Y'all want me to drop a free trading course? I think that would. I'm gonna have some regulations now. I might, if any of you want it now, I'll give it to you now. You guys just gotta go. That's it. We just gotta blow this shit up. That was always been my goal from the beginning. I always wanted to make a free school for kids to be able to learn. Well, adults too. Don't get me wrong. I know a lot of you guys are actually old. We're all old, right? But you know, that's actually one of my goals. So get ready for it. Make sure you pump that shit. Y'all just gotta pump TTF, man. Share TTF on your profile. Share the live stream. That's it. You know, I'll make more money on advertisements than any sort of course. And I just want to give it away for free. Honestly, I think a lot of people need help when it comes to trading and to go about it the right way so that they could actually know what they're doing. Because, you know, maybe people won't get mad at me if I tell them the truth when it's saying, hey, this is what's going on with the market. This is how you're actually going to make money. You know, it's not going to be all lovey-dovey bullshit, but you feel me. Let's go. Let's get everybody getting on this live stream, getting on the YouTube. I got to go back to surgery. What the fuck? Well, good luck, man. Good luck. I wish you the best of luck with surgery, bro. That's wild. Hopefully it goes well. I'll pray for you. But you could get your IV from like stuff like here, and even if we look at you know, here's the craziest part. When you guys go look at like Netflix earnings, I will tell you something. When you look at the earnings right here, again, this will probably be better on if you guys are on the YouTube, you could see the implied volatility was high. So even if you bought the weeklies for this week's earnings, like these ones are probably going to go from like what was the stock at earlier? I think like 360. I'm just giving rough estimates. And then you're going to have to slash it in half, or what, 400? So the ones at like, let's say $10 out of the money, they were going for $1,200 on the weekly. These ones will probably go from 20 cents to like $600. I hope, if it's on the put side, but even then, this was a big move. These puts weren't really too cheap. If you were betting on a 10% move for these ones to go, $5, you're $3 in the money. These are guaranteed going to be worth $300. So it was these contracts were expensive. Netflix has been expensive. I think I got a small play, but you got, it's not going to be anything too crazy, but you got to be careful of that. Do I do mentorship? Not with stocks, man. Real estate, we could talk about that. But like I said, we're going to drop something, we're going to mix things up. I am going to drop a free course once I get it finished. And that'll be my gift for all you guys. But like I was saying, with these Netflix earnings, they were somewhat cheap. I am going to be excuse me. I'm going to be interested to see where these wake up at when we wake up in the morning and see where they are. But these contracts were expensive. At the end of the day, even though it did move a huge amount, and that's how you make money with the options, though. At the end of the day, even though those contracts would have been expensive if they didn't hit, but they obviously hit. But the aspect is that took a big move, and that's one thing too I think a lot of people miss is when we talk options and trading, you can't underestimate the fact it's all about the move of the stock rather than the option. All right, everybody on Instagram, we got to get on this YouTube, man. Where's everybody on the YouTube? Where my YouTube fam at? Netflix. So I don't know if you guys realize you could even go on YouTube. Usually does their earnings. They'll stream it on YouTube, believe it or not. So I'm waiting for that to come out. But that's the thing. The stock is down now. It could easily go up if the stock goes up in any way, shape, or form. Or I meant the earnings call. It could go up. That's usually what happens. If you guys are familiar with kind of what happens in the market, stock will drop. Investors don't like the beginning part of it. They don't like what was said about, the numbers come out. They're not good numbers. Simple as that. But then what happens is the conference call comes out. The executives of the company, they explain what happened. They explain their take on it, and then the big thing people are going to look for is the future guidance and how management wants to talk about that and what they think is going to happen. So here, let's see. Down 14%. Company reported second quarter revenue and subscribers below its own forecast. So again, that's one thing to look at. There's two different forecasts that come into play with why, and two, if you guys are new, you're probably asking, why did the stock drop this much? And if you could find out why a stock dropped this much, you could make a lot of money on it. That's, someone even asked in the chat, did I short it after hours? I don't short after hours. I would have played the options. I played other options and I played other things through Netflix. Again, I'll go back to it and I'll show you guys. The Netflix puts were expensive. You were $60 out of the money. You would have to pay a 86 cents for a weekly contract. That's crazy expensive. I played it through other things. I could show a play. I played Facebook on one of them because Facebook and Google, any of these big tech stocks, when one kind of misses, there's going to be a temporary, I guess, move with the other one. So that's what I'm looking at, and that's what I played, and I played it for dramatically cheaper. I did buy contracts today at like 20 cents. So again, now take a look. Netflix is going to I don't think the conference call, it could be out yet. I'll have to double check. But Netflix is going to release their conference call through here. They're going to talk about management, but this isn't said and done. So again, if you're shorting this after hours, you must have a very, strong gall. What's up, Sean Sanders? And at the same time, you're going to wait. This could really change after the conference call. That's usually what happens, and that's what we're looking for. But now, going back to the report itself, there's two things going on. Netflix is down because they missed their own company estimates of earnings, profit, subscribers, revenue, all that. But they also missed their revenue or, estimates that Wall Street gave. So I guess people in the YouTube, people on the Instagram, are you guys familiar with the difference between Wall Street estimates and the company estimates? Can you guys give me an answer on that? And if you're not in the YouTube, I suggest you go where you could see my screen a lot better. So holla at me. But looking at it in a perspective, that's one thing they missed. So that's my question for you guys. Do you guys know the difference? Then revenue came in, and here's the numbers. They didn't miss by much, and I don't think revenue, this is how investors are analyzing it, because, they were expecting to make $3.93 billion. So they made like what, $200 million less, $100 million less. That's a decent amount, but they only made 3.91 versus 3.93. That's not a lot, but the issue that killed a stock like Netflix is the amount of subscribers that they've been getting. So Netflix since 2014, if you guys go see my video on, Sean Sanders, all up on that YouTube. Yeah, everyone in the Instagram, go on the YouTube. You could read this stuff a lot better. You could see it. Talk to me on there. I want to consolidate everybody on there. So everyone get on the YouTube if you can. Go to YouTube. Just go to my channel even, and if you're on mobile, and it should show up live. But looking at this in perspective now, this is if you go look at my video where I said making $100,000 on options. When you go look at what happened with Netflix, people got mad that they were spending money, but people like the idea of Netflix getting subscribers. Think about it. Every single one of you probably has a Netflix subscription. If there's 15 people in the chat right now, you could think about that. That's $10 a month. That's $150. Russell Mueller. What's up, man? If you do that, that is $150 a month just from that. So even if they didn't make as much money, a company like Netflix wasn't concerned with making as much money. What investors wanted to see is, investors want to see that they're getting subscribers. So that is why Netflix is down 12% right now. 12%, because they missed subscribers by 1 million. So they were forecasting that they were going to get 6.2 million subscribers in the next 3 months. And that was from last March till now, right? March or April till now. So you look at it now, they only got 5.1 million. So think about it. 1 million times 10, they literally missed by $10 million a month in potential subscribers. And that's why people are going down, because now when you rewind back to March and April and put it into perspective, why did Netflix go up? So let's put this to the side so you guys could see, because let's go back to Netflix's last earnings. If we go, it was what? April, around here, right? They reported they were at 310, shot up to 344. That was a big report. And then what happened from 344, they dropped a little bit, but then it started going back up to 400. This was a very big run up from last earnings because Netflix came in with high estimates. Netflix said, we're going to make this much money, we're going to make all this, and look what happened. They actually dropped in subscribers and everything. All right, Alex, I see you on YouTube, my guy. Is Netflix dying? It's dying right now. It doesn't mean it's going to send the company plummeting. Like, this is literally real time. So here, if you guys see, this is where Netflix closed after hours at $400. They dropped the report about 5 minutes after market closed, and boom, it dropped about $49 so far now. So it's dying now. It's down. That's a big amount, especially on a $400 stock to lose 10%, above 10%, that is a really, really big amount. So what's going to happen here, and this is what we're waiting for, is the conference call. So the conference call is going to come out, and that's what I'm saying. Watch. Oh, shit. I encourage you guys to watch what's going to happen here, because even though you see it here, after the conference call, it's either going to go down further or it's going to bounce up, and you could probably see it end at like 370, 380, and that would be reasonable because, again, the conference call changes everything. That's like the interpretation. So, again, that's what I was telling you guys. You have numbers coming out. Here's the data, and now the company's going to go interpret it, right? So it's like if I said, I'm trying to think of a non-crude example to give you guys, but it's just the more explanation. It's like I killed somebody. If I told you guys I killed somebody right now, what are you going to be thinking? You know, you're going to probably be saying, oh shit, Josh killed somebody. Josh killed somebody. Oh my gosh, Josh is a murderer. Josh did this. Josh did that, right? But now, if I told you, no, I killed somebody because it was self-defense and they came into my house and that's what happened, you would say, okay, it's a different story. So that's what's going to happen. But now, here's the Netflix. If you guys want to find out how to get the Netflix call, go to youtube.com, Netflix IR, Netflix Investors Relations, and usually they'll go live here, and I think it'll be in like 30 minutes to an hour. They're going to go live, and they're going to talk about what happened. So before we go any further with that, do any of you guys have, I love your, I love you. Do you guys have any questions on this so far? There's a lot we still need to cover on it. Hey, a book on economic, that's what's up. Do that, everybody too. Go tweet out this link. Let's get some good questions in here. I'm gonna sit here till the conference call, and we're gonna go there. What's my play for tomorrow morning? My question is, hi Josh. My play on Netflix is going to be to wait. If I'm going to see where the options are and what's going on with the pricing. But I already, like I said, I made my play through another company. So I made my play through a different, what's it called? A different company that would just be related to Netflix that pretty much has already dropped a couple % from that. What's that thing you used to see all this? This is E-Trade Pro. How much did Papa John's stock go down? That's a good. I don't think they dropped too much. I think he just said some dumb shit, and the stock dropped. Pizza is their ticker, PZZA. I think that's cool. They dropped a little bit, dropped and then came right back up. But that was actually today. I think from the incident, it was just a lot of up and down. They didn't really, surprisingly, that wasn't big enough news because at the end of the day, sure, it could have killed some of their business relationships, which could have meant less money. But when you put it in a perspective, all he did was say, he said some words that could affect the profit of the company. But in the end of the day, it didn't. Does E-Trade Pro cost money? No, not if you you have to make like 10 trades or 20 trades a quarter or something like that. Forex or stocks? Oh, that's an easy answer, bro. Stocks for sure. Don't waste your time on that Forex. Do you have a different stream to talk about real estate? No, we do everything all on here. That's a good question, Mag, because a lot of people, I think people misunderstand it when they're like, oh, trading fraternity, trading stocks. Not at all. Real estate is a trade, in and of itself. I'm all about if you could buy real estate, you could buy stocks. If you could buy stocks, you could buy real estate, all that. So I answer questions as it is. I'll dedicate some streams here, but we're covering anything really business related on this channel, primarily stocks and real estate, but also e-commerce and other stuff like that. What's your outlook on the SPY? Are we going to get over 2,800 or get dumped on earnings? I think earnings might be good, but it does suck because a lot of people had higher expectations for earnings from last quarter. Again, like look at Netflix. Netflix set very, very crazy, expectations. So now if a company like them misses it, we're going to have to see what happens. So it's going to be interesting. But at the end of the day, I think that 2,800 is a huge spot and it'll be interesting. Do you open up a business when starting trade stocks? Yes. Then it depends on how much you're going to trade and how often and how good you are going to be at it. I will say. So you see, Netflix is kind of creeping up. I want to see if there's any other news that dropped. Netflix blames faulty forecast. Company missed its own subscriber growth estimate and blamed the miss on faulty internal forecasts. So it had such problems in past quarters, causing gyrations in its share price after the release of its quarterly financial report. So they're trying to blame it on faulty forecast internally, which is interesting. I think that's actually really interesting that they said that. Joey Guzman, my dude. Can you play with demo money on E-Trade? No, you could do it on, what's it called? You could do it on, what was I talking about? On Thinkorswim. When are you going to do the webinar for the wholesale real estate? I think I got your email. Send me an email and I could get you a link to it. But I do them on YouTube every now and then. We have a pre-recorded one that we did a while ago. But we do private webinars for everybody in TTF real estate. We do those pretty much every Sunday. So it all depends on what level you want to get into it on there. But there's also videos on my YouTube. You could go to my YouTube channel now. 2 of the latest streams before that where they have real estate in the title, you could go over. Those have everything to do with wholesaling. Someone getting fired at Netflix. Well, I don't know. I think they're just saying, there's so many, X factors, so many things changing. I think it'll be interesting. I think it's interesting to see that this is the reason and whatnot. What's your view on the Google chart today? Well, it's going to really change because now whatever's happening with Netflix is going to feed into Google, but then now, and think about how investors are going to react after today. They're going to do the same thing, but I think Google look just like Facebook. Here's Facebook and Google overlaid. They look exactly the same. Even Amazon, I think, too. And, Amazon kind of started lower, went back up, but, pretty much tech moved exactly the same today. And I think Netflix was the one that didn't. I don't think Netflix had the same style. It kind of did, but then it kind of just held up. But most of tech has moved exactly the same today. So, and then Facebook did exactly what Google did. But I am interested in all those. I think, like I said, it's going to be interesting to see how people respond, investors respond to what's going on with this now. It's been, the first time in a while where you got, a big miss like this, and then you have investors who were excited about it. They were expecting a lot, and then you see this downturn. So it's a pretty crazy mess, honestly. But everything else, every other stock and FANG is gonna definitely have it. Actually, I want to look at Apple. That's what I'm interested in now to see. But you also have to understand the types of businesses and how they're different from each other, and that's the why. It looks just like Google too. That's the wild card of earnings, because you're going to have companies that are doing so decent, and then that's it. They could change after one earnings. They could all move together right now, but one earnings report could make it or break it. What's a good way to contact message you for questions on real estate? Send me an email. Email is the best way. tradingfraternity@gmail.com. And let me know what you're trying to do. And if you're really trying to get involved, we have a serious group. Go in the link in the bio. You could click that. And, we have a serious group for real estate and guiding people on it, getting them licensed, getting them into wholesaling, flipping, all that. So it just all depends on the level of serious you are. If you have just generic questions, my YouTube video is there. But, feel free to email me. I eventually want to learn real estate from someone yourself knows a lot. Well, holla at me, man. Feel free. I think I heard someone today, and it was just saying, are you in California? I am in California. Yes, sir. Sunny San Diego all the way to smoggy LA. But I heard this today. It was really good. Someone was saying, well, why is everyone wants to wait to do this, wait to do that, but at the end of the day, time is going to pass anyway. If you're like, oh, I'll wait till next month, I'll wait till 2 months late. It's like by the time Christmas is still going to come around, just where are you going to be? Are you going to at least be situated and advanced to some degree, or will you be in the same position? So That's what you gotta really put into perspective. Think it's good strategy to play options on stocks with upcoming earnings, or do you wait for the reaction? Oh no, I think it is. It is it's tantamount to gambling, and it all depends on the earnings season and what you know about the stock. But like I was even showing with Netflix, they were expensive. These were expensive. They were a risk. These are still going to go up in value, but if it didn't, you paid $100 for the stock to move 10-12% more than that, and you're still out of the money. So that's very, very risky, I would say. So you gotta, it is a strategy, but the strategy comes by identifying the cheap plays. If you could do that, then yeah, you could find stuff that's going to be really, really good, but it's all about how you go about spending the money. Decrease. Wow, this is the biggest 1 day decrease for Netflix since 2014. So again, we're gonna see what the earnings report does. I'm gonna be excited to see what happens with that and to see if there's a play. You still do private streams for stocks. You refunded me last time because you said you weren't adding new members. No, yeah, we don't do. I haven't done a private stream in a while for that. We're like I said, we're working. We're planning on dropping something for free for everybody, but I'm not doing that. I don't know if you've seen any of my other videos. I'm looking for a certain type of person, and I want people to grow and add to our team beyond just guys who just want to learn stocks and just do that, if that makes sense. But no, we don't do those private streams anymore. This is this is why this is my gift to you guys putting this on. So hopefully you guys enjoy it. But like I was saying, so Brandon, if that answers your questions on what's happening here, did I buy into Netflix? No, I played other. You could call it a sympathy play, something through Netflix that would have reacted equivalently. Like, because again, after this report, look at after hours. Look at a company like Facebook is a good example. But again, like Facebook closed at 207. Now Netflix has a bad earnings report. Investors are shocked. It drops $3 after hours. So you got to put that into perspective with what's going on. But there's other ways to play Netflix than not playing Netflix. Because like I showed you guys here, the Netflix option chain was expensive. It wasn't worth it. Again, 340 to 360, the stock was at 400 to 340, a $60 move. You would have paid 80 cents. And now this contract will be at like $4 in the morning if it stays there. But again, that is the next thing I told you guys. We're sitting here, we're waiting for the conference call. The big thing that you guys need to put into perspective, the big thing that you need to look for is that it's not going to stay here. It's either going to go lower after this conference call, but a lot of times in the experience that we've had, and I've been playing earnings since the longest I can remember. Actually, playing earnings was like one of the first plays I made money on when I was like 14, 15 years old. I remember Staples had an earnings report, and I played them, and that's how I got into it. So, and I remember I made like $200-300. I bought them the night before. They had a good earnings report. I went to school like $300-400 richer. I thought I was the man. So that was fun, but it's all depends on where the stock goes from here and where it stays. So that's that. I need to go to the bathroom, guys. So give me 1 second here on YouTube. Take your time. Well, stay. Don't go anywhere. We're waiting for this conference call. Do me a favor. Make sure you guys are subscribed. Drop a like on the video if you like this so far. And share the stream. Tweet it out. Do anything. Let's get some. I want more questions, and drop some questions in there now. So when I come back from the bathroom, I could actually read your guys' questions. Love. Give me 2 minutes. asleep, man. All right. What's up? I'm joining your team. Let's go, Sean Sanders. I've been waiting for you, Sean Sanders. This could get exciting. Watch the volume pick up if it starts to break below here. Where is the earnings report for Netflix? I'm trying to see if that's out yet. So again, like I said, they stream their call, and I don't know if you guys even want to see.
Good afternoon and welcome to the Netflix Q1 2018 earnings interview. I'm Spencer Wong, VP of IR and Corporate Development. Joining me today are CEO Reed Hastings,
go to NASDAQ.com, and you can see the official report. This is where the filings come in, and this is where you could see how everything looks. So let's take a look here. And this is how you pull up filings too. You go SEC filings, you go to NASDAQ.com, enter in the symbol, and see, it still says 400. Again, that's what they closed at. They closed at 400, you guys, and they're at 343, about to hit. You know, what's the low? 342.50. It's about 80 cents away from there. I want to see what's going to happen. That's going to be interesting. And you guys could even, and this is why I say, be careful shorting after hours. I'm not a fan of. I just play the options. Options suck because even if you bought a put and it's in the money right now, you don't know where this is going to close at the morning. But let's see, man. This shit's dropping. I like watching this. I don't know. You're not supposed to watch it. I don't tell people to do it because it's, you could get very in and out and it's very emotional. But, man, I love watch like a 343, and if it breaks below there, it's just going to plummet. It's there it is. That's where the buying comes. See, it's well, we'll look at the option chain. I want to look more at the earnings because, again, too, at the end of the day, all you had to determine, options are simple. Like with Netflix, they could have been a good play, and again, this is just a crazy move that happened. But when you look at it, it's like saying, hey, it's either going to be overpriced or underpriced. It's either going to have a good risk reward or it doesn't. As far as open interest telling you where the stock is going to go, no way. I have a video on it. I haven't released it yet. I'll put it out. And when you'll open interest with options doesn't mean much because it could mean anything. There's 30 different ways somebody can buy a stock with 20 different meanings. If I buy an option, it doesn't mean if I buy a put, it doesn't mean I think it's going down. I could be selling the put. I could be selling calls on something I own. I could be shorting it. So there's many things that it could mean, and that's why I'm saying it's, got to be careful when it comes to that. So here's the 8K they just released, and this is what they come out with. They say, hey, this is what happened, and they're giving all their numbers, and this is what you guys got to learn how to read. And they say, the global ads, where they forecasted actual. So again, this is why Netflix has been doing good this whole time, because really, last time they were below expectations was a long time ago. So now, and it's kind of bad to see because you're seeing they went up, came down, up, and then now this trend is kind of bringing them back to the 2017. If this could set, wow, that's actually really bad. It could set a lot of bad things in motion for Netflix, or it could start letting you know, hey, Netflix is starting to reverse in terms of where the company's headed and what's going on. So this is their quarterly forecast, and this is what they're talking about. And I don't know if you guys know how to read this. This is saying quarter 2/17. So this is the same time period last year. Then the quarter after that, the fourth quarter, and then now you're seeing quarter 1/18, quarter 2/18, and then now. So they're doing more revenue on the year, better than last year, but more revenue substantially. But again, like I said, the big part where they missed was now their forecast. So, and even then, no, this is their forecast, excuse me. So this is where they're expecting next quarter to go. Any sites that have accurate earnings expectations for different stocks. There's two ways to look at earnings expectations. Are you talking in the sense of what people think the stock is going to go to, or what they think it's, because a lot of people don't do that, and I wouldn't trust those, price targets, shit like that. It's just what people, there's analysts obviously in the big firms, they come up with those. But the big thing with forecast, you could look through the company. You want to know, what is the company expecting to make, and what is the likelihood of them hitting those forecasts and expectations. And that's usually what happens, because as you see here, when they give good forecasts, it makes the stock go up. Again, this is what happened here. They forecasted here and it went down, but that makes sense. I don't think they're saying, oh, we had bad internal forecasting. No fucking way, because they knew with how bad their earnings were last quarter. It was decent earnings last quarter. If they put their expectation to 5 million where they would have been, the stock would have went down. So now let's see what they're saying for people. Where's net addition? See? So now they're forecasting, so that's 6.7 million. They're forecasting 6.5 still? No. Yeah. So they're still highlighting, no, I gotta see actually. I think they'll give more elaboration when they get into the actual call, but that is going to be one thing to look at, is where they're expecting to go from next quarter. So again, I think people are just still shook from this last report, as well as where it's going to go. But if you want to see where the company's expectations are, you could just look into the company, and you could even see the consensus through, Thinkorswim, TD Ameritrade. There's high estimates, low estimates, and then what people do, they take an average of all of the estimates of where they think a company is going to be for EPS, revenue, all that, and then they take the average and they go with the consensus number, which is that middle number. Saw Netflix and Tidal, had to watch. That's kind of ironic when you think about it, right? Because it seems like people aren't watching Netflix. That's what's going on. Trey, you said, what is the related company you played? Going nuts trying to figure it out. Well, I don't want to. That's a thing, because this is why, it's funny. A lot of people say, why don't you like to put your plays out with this and that? Because with options and the ones that I play, if I have 50 people jumping in on them, 25 people go to try to buy, and every single one of you could buy it. I bought it for 20 cents. That's going to jack up the premium and do that. So, Trey, I'll post it in the TTF real estate chat for you. Okay? I'll drop it for you. Don't worry. You don't need to beat your head against the wall. That's where I'll drop it. But again, let's go back to that. Maybe if you guys, we could ask questions and see if we could figure that out. But now, that's what I was saying. Did I play Netflix? No. I played a put on a similar company. Again, are you guys familiar with how a sympathy play would work? That's what they call it. I think it has a weird connotation because I see a bunch of penny stock and dumbass motherfuckers use that term. But what is a sympathy play, essentially? Can you guys tell me what that means? Just barely below. So wow, so that's why. So again, Netflix missed this earnings, they missed expectations, and then for next quarter, they lowered their expectations beyond what everybody was even expecting. Collateral damage, yeah. It's collateral damage, and then there's two ways to look at it. It's companies that are in the same industry that would also get hit and that would lose. But then on the other side, it's viewing how investors are going to react. Again, you guys got to think about this. The market is crazy. Warren Buffett says that, at times people think they're worth more than they are. The market thinks it's worth more than it is and charges a high price. And then sometimes it gets depressed and thinks it's worth less than what it is. And that's what happens when you come into earnings. And then once people see one, and that's what's going to suck, honestly, for you guys, because if companies are going to report good, it's going to put a wrench in a lot of earnings plays for this quarter now, because you just had one huge miss. Now puts are going to get more expensive for almost every company, because people are seeing, oh shit, what if this happens again? They see what's possible. So that's one aspect of it, but it's going to be the companies that are essentially intertwined and have a reason for people to go or have a reason that people get worried. And that's what happens when people get panicky and worried. They see this happen once, it starts to spread into the other stocks. That allows you to catch a stock after you're about to FOMO the trade. No, well, it's not FOMO. I bought this stock today. I bought it earlier today. I think I bought it a few minutes, maybe like 20 minutes or an hour before market close. And again, I bought it for 20 cents. I'm already up on it too, based on it. You know, I closed a little bit making money by close, but then after Netflix reported, Netflix dumped, it dropped. What were the expectations this quarter? So Netflix hit revenue. Netflix was on target with revenue. Well, they were slightly below revenue, but it was pretty much the same thing. But then what happened is that they missed their subscribers they were supposed to add by about 1 million people, which is insane when you put it in that's a big miss for them, and that's a big metric that people look at when it comes to Netflix. So that's really what they missed. And then they said, okay, we even expect to add less people for our services than even Wall Street was saying that they were, because that's the thing. The company makes expectations and then Wall Street makes expectations. So you guys got to understand the difference between that and really understand that. So that's one aspect of it. But yeah, there's just a lot of weird shit going on with Netflix in general, but it has to do pretty much with these expectations. And, I don't think their revenue was too bad, but I think the other stuff is what really costed them and really slowed them down when I put it into my view on this. And again, I'm more interested of what this is going to mean for the other companies now coming in earning, your Facebook, Amazon, Google, and everything. Expectations were high to begin with. Not really. I don't think so. That's where we looked up, because here's their filing and here's a dot plot of their expectations, right? So this is how, 2016 quarter 2, they estimated 2.5 people. They reported 1.7. Quarter 3, they expected 2.3. So again, they missed it, guided below just like this quarter, and it went down, but then they beat it. Then they guided up to 5.2 million. They beat it by 2 million. Then the next pretty much year, they guided below, hit high, guided below, hit high, guided below, slightly higher, beat it, same place, beat it. And then that's what it's saying. This expectation that they did for quarter 2, it wasn't a high expectation. It's simple as that. They didn't, they expected 6.3 or what? That's funny that 6.2 is slightly below where they expected to go and how many people they added. And now the next thing you want to see is why this is interesting, because they guided 6.3 for quarter 2, but 2017, quarter 2 is a slow quarter for them. You take a look, any time they ever missed was quarter 2, or they had low expectations for quarter 2. So maybe they could have, dropped it down a little bit. But in general, this wasn't too high of an expectation in relevance to how much they were earning. But I guess for their second quarter, it was. But it's not like they haven't hit 5 million members. And they still did 5 million, new additions in quarter 2. But it doesn't matter. Are these active subscribers or new subscribers? No, these are net additions. So these are new subscribers, new people they added. And that's why, we're saying, why is Netflix dropping such a crazy degree? Because that's important for Netflix. Like we said, Netflix loses money. No one gives a shit about how Netflix doesn't make a profit for investors. It's not really what people are looking at is the long run, because again, if Netflix is adding every 3 months 5 million people times 5 million by $10 a month, that's $50 million. That's a lot of money a month that they're making. So again, their logic with investors, if Netflix gets to 1 billion users or a million users, let's say, or 100 million users, a billion users, something crazy like that, think about it. Let's say they have 1 billion users and they're making $10 a month. They're making $10 billion a month. That's the potential to make a lot of money. That's why people are willing to invest into this company and pay for no earnings and pay at such a high price. Does that make sense? we'll stop. Maybe we'll stop there. Do you guys have questions on that? Let me get some questions in this chat, and let's see where your guys' heads are at to understand all this. What does analysis consist of daily? What do you mean by that, LT? Can we watch this stream later? I don't know. Think about it. Did you share the stream? That's what I'm gonna ask you. Did you post this on your Twitter? Are you subscribed? Everybody in here, make sure you're subscribed. Share the link. I want more questions in here. I want more people in here. For Q3, Netflix forecast global net ads of compared to 5.3 and 17 was 6.5 and 4.39 respectively. Yes, they get a lot more. They get a lot more international. That's where the growth is. Twitter is crap in my opinion. It is. Share it on your Facebook then. Share it on your Facebook. Share it on your Instagram. There you go, Chippy. That's good. Well then, I might save it just for you and just send it to you personally. But it is international. International is definitely one of the bigger issues with it, because when they already maxed out the United States, and the United States isn't that big. United States is 300 million people. Even if they got 150 million people, half of the United States, which is a big part of this, you have to think where they want more growth, they want more money. International is where it's at. I don't know. Have you noticed? Do you have Netflix? Have you been on Netflix and noticed how many Indian titles that they're playing? And have you guys seen all these Indian and Spanish movies? A lot of Indian movies. That's what I've noticed. Have you guys seen that? Are you replaying this? Maybe, Joey. Maybe. Have you shared it? Are you a longtime subscriber? I'm just trying to hook up the people who are actually here and active with it and really want to learn. Soak it all in, Russell. Soak it all in. But have you guys noticed that, though, with Netflix and the foreign people, or the foreign titles? Have you guys actually seen that? I want to make sure I'm not the only person, but I think everybody, sees it. I mean, if you're talking about the ridiculous six, well, there's a few. There's a bunch of just random titles, and that's why. Will have an effect. Oh, I did not see that. I never noticed till you just said it. Yeah, that's why when you guys see it, nice, Joey Guzman. That's what's up. I'll hit you with the replay then. When that happens, why do you see all those Indian movies? Why do you see those Spanish movies? They're trying to get more titles for foreign people, so foreign people set up. Because guess what? There's 300 million people in the United States, but there's literally, what, 1 billion people in India? So that's where they're trying to go to. Why didn't I learn this in school? Because your teacher's not pretty familiar with all this usually. What do you think? And then, Timmy, you said, I lost connection. Do you think Netflix dropping exponentially will have an effect on other stocks in sympathy to Netflix? Yes, and that's the play that I made, and that's what I was looking to play on by finding other plays, because Netflix was an expensive one to short or to buy the puts on. So it will have an effect. It will be short-lived probably, but then again, this could set the tone for the rest of the earnings for this quarter, which people are going to get worried about and what people want to see. So that is going to come into play, and that's what we are really looking at. But it is going to have some effect. To say it will have no effect, no. The real question, though, is how long of an effect, if that makes sense. What do you think about the Chinese Netflix? Also, do you see financials on Chinese stock AD? How do you see it on ADRs? You can look ADRs. It's easy to see. ADRs are just, you got to make sure you're able to convert from the currency to all of that. You know what I'm saying? But you could just pull them up on NASDAQ.com, just how I did here. I don't know if you saw me do it on this. Go to NASDAQ, enter in the ticker, and then go to stock filings. Where is it? SEC filings. Because like Alibaba's at ADR, and you could still pull up all that information. Is ADR? No. ADR means American Depository Reserve, or there's ADS, American Depository Share, or alternative depository share. There's a bunch of meanings for it. What it is is it's pretty much a Chinese company, a foreign company, so that they could trade publicly or outside investors could have interest. They'll sell the Chinese company, the foreign company, to a Caribbean company or a company that could be traded on the stock market, and then they'll buy shares of that company that owns the foreign company, because they can't buy foreign shares in that country, if that makes sense. I don't see their quarterly. For IQ, do they have an ADR publicly traded? What's your email? tradingfraternity@gmail.com. Don't send me any nasty pics, man. Okay? Keep it PG. So, what other questions y'all got in here, huh? Alright, my dog is crying. I need to take him out real quick. We'll go use the bathroom again. They don't have an 8K. It's not going to be an 8K. It'll probably be like what's it called? An 8F, I think. Check for like an 8F. You might find that. Go through them. You'll find it, though. They'll have something. But if they have filings, you'll find what you're looking for. Just click through them. I think it is an AF or a 10F, something like that. But I'm going to go get Jax out there. Hold on. What? Yeah. All right. 6K. There you go. Look at that one. Anybody play Fortnite? I haven't played Fortnite in a while, man. I'll focus on trading. Doing it. Hell yeah. Who doesn't play Fortnite? That's funny. Y'all guys, how many of you guys are Netflix subscribers? Maybe that's a good question. How many of you guys have Netflix, or your family has Netflix? You know, you could access Netflix. Everyone I know, for the most part, you got Netflix. So that's one. That's $10 a month. What else we got? Hulu as well. Hulu. See, and that's the thing. Hulu is a competitor. Amazon tried to even compete with them. You know, Amazon has the live video, stuff like that. So that's interesting to see. You know, they have competition in that aspect. But you guys are seeing, you know, and that's where it's kind of crazy to think about, because most of you guys are probably young. But again, because I guess someone asked me, when do I think they'll get like 1 billion subscribers, which is like what? Less than 20% of the global population. It could take a long time, but putting it into perspective, what we're going to see with that is that, you know, at one point people might turn away from cable. It's kind of crazy how many people still pay cable from an older generation, but it's going to be interesting to see. Then there's the net neutrality, stuff like that. Anyone use Crackle? Thing is, Netflix, it's just streaming service everyone knows and uses. Walk down the street and ask people what they use. Nobody ever says Hulu. Amazon's getting popular because of Prime. Yeah, I agree, 100%. And that's why, but that's part of the value that Netflix has got. It's created that brand value, more or less, that has gotten people to that point, you know. So but that's a very good point. When is this conference call? I think it's gonna happen. Let's see. Usually they put it on here. So again, this was their earning report. Consolidated. And as you guys see, they're losing money for the most part. You know, they're making revenue. You know, you put it all together, their net cash used, they're spending $535 million in that 3 months, or 518 this month, which is pretty crazy. Definitely need to get better titles, which is why Hulu. Yeah, exactly. Well, again, and that's why I said pay attention to how they're adding these foreign titles, because again, they don't really care about the Americans as much as anymore as trying to get, you know, China, if China would allow them, you know, and that's what they're trying to work. I think they said China is going to allow them, but they need Chinese titles, Indian titles. That right there will double their business, and it's kind of crazy to think about. SEC filing we see will tend to outperform our near-term operating margin. Targets to dollar weakness and underperform on dollar strength. We've seen the dollar rise in 3 months. We can infer. Well, the dollar's actually strengthened for the most part, or weakened. I mean, you know, the dollar's been somewhat down, but that is something, and that's something to notice. Now, again, you guys always ask, you know, I don't trade Forex. I don't like Forex, but I've told you guys how I use the dollar to essentially, you know, make plays on the stock market and do my analysis, because this is one of them, you know. I guess it has kind of strengthened in the last 3 months comparatively. Never mind, I thought it was going down. I guess I'm still old. I'm still looking at the beginning of 2018. But yeah, it has gone up, and that could make sense. But this is what I'm saying, you know, why I don't trade Forex, but I still look at this stuff, because just like Netflix says in that filing, they're going to underperform on strong dollar, outperform on a weak dollar. Think about it in perspective. They have international clients. You know, most of when we look at the filing of how they performed, take a look, US streaming and international streaming, they only added 500,000 users in America for this quarter, and that was actually awful. Compared to last year, they added almost double net additions in United States, but then when you guys look at international, they added 4.47 million people internationally. So that is a very, very important and huge metric for them. And then again, you see if they're making, that's a majority of their money. You know, they're making now in the US $1.8 billion a quarter. This quarter, they made $1.9 billion in international, and that's kind of great considering they've almost doubled that since last year's second quarter. So that's actually crazy. That's actually really crazy. The internet, and that's something, you know, investors, why Netflix has gone up, and even though they missed, I could still say, yeah, Netflix still has a lot of earnings potential, because think about it. If they're making, you know, they're growing. They're literally doubled their revenue almost in international, which is kind of crazy. That's actually very crazy. It's doing great. Let's see. That's the thing. The products we use now have made our generation so much more accessible via the advancement of technology. I agree. Confused to what the premium is in options. We'll talk about that. We're going to focus on the Netflix maybe when I get back to looking at the options, but in short, premium is what you're paying to get in the option, and I guess how much above it's worth. And we'll talk, it's a long discussion. Do you think they already maxed out US or just a bad quarter? That's hard to say, honestly. I don't know if this is showing total memberships. Yes, it is. So total memberships right now, they have 130 million, with 70 million coming from international and 57, but they've still grown it 6 million people, which is crazy. That's how much international they'll grow in a quarter. That's what they've done in the US in a year. So okay, this is quarter 2 last year, so this is the same July period of 2017 till now. You see their memberships, total memberships, they're at 57 now. They're at 51. So they added 6 million, but they could do that in one quarter with international. So do I think the US is maxed out? But no, but they have a big percentage. Think about it. 57 million divided by 350 million. That's 1, 2, 3, what's 1/6? What's the math on that? That's a pretty big again, they've done with US what they're trying to do for the whole world and get that 1/6. That's 16%. So 16% of America is a member of Netflix. So think about that. Is it maxed out? I think it's up there, and that's where investors were getting worried maybe about a year or two ago, maybe 2.5 years ago, that's saying, hey, maybe the United States has maxed out when it comes down to where Netflix is at. But then the real question is, where other areas can they get growth? And you look at their international, they're growing it like crazy. Again, revenue is almost doubled, but now look at the change from total memberships internationally. They went from 52 million to 72 million, and at the end of the day, there's a lot more people overseas that they could reach. So that is a interesting area to look at for them. Is that in Canada? I think Canada is counted as international. I don't think they segment it and break it up like that, because they are strong in Canada. I think they could do a lot better in Canada, and Canada even has better titles, so it's interesting. With all streaming services, that people cancel service when the shows they watch are on break in between sessions. I don't pay for HBO when Game of Thrones isn't running. I want to know more about economics. Well, we'll get you on economics. That is true. Rec law, some people do cancel, but again, when you put it in a bigger concept, think about 57 million people. Not half of 50% of those people do not cancel when the show's on there. They just leave it, as long. But one thing you're right about is the library. This is why Netflix spends like $7 billion a year on getting titles and creating titles, because if you have decent your Game of Thrones might not be on this or that, but then you could watch a bunch of other stuff at the same time. But what you are saying is true, and those are effects that Netflix is trying to account for, if that makes sense. They're trying to, one of their biggest hurdles is content distribution, getting a content library, how they're going to explain it to people, all that stuff. So that is going to be one thing that will be actually very, very important. Good question, or good statement. I want to know more about economics. So, any questions though with this talking? Hopefully you guys are getting some insight into Netflix. I want to see, when is this conference call going to hop on? And if you ever want to know more, usually
good afternoon and welcome company, to the Netflix, if you just do IR dot I'm Spencer Wong,
website, you'll get their investor relations. See, that's where it says here. So July 16th. Oh, 3 p.m. Pacific. Okay, so 20 minutes. Nice. So do you guys, I'll leave this on. We could listen to that. You're going to have the call come on here in 15, 20 minutes, and it's going to be interesting. I want to see what they're going to say. Do you guys hear me still? Check, mic check, 1, 2. Do you guys still hear me? I want to make sure, because I'll play it. We could play it through my speakers, or you guys, when it comes up, we could listen to it. There's going to be the video interview, and you'll see how they do it, their webcast. It's actually very, very interesting. See, where is it? See, YouTube. again, they live stream it on YouTube, which is going to be, you guys could all watch it.
Good afternoon and welcome to the Netflix Q1 2018 earnings.
That's quarter one. This is the old one. This is how they do it. If you guys want to see, it's kind of cool. You know, Reed Hastings, the CEO, they put them all on here, and that's how they do it. So you're gonna get to see, and if I don't know if you guys have listened to a conference call, depending on where you guys are at, but these are very important. Like I said, it's interesting to see the stock here, because after this conference call, we could watch it side by side, and you guys could see how the stock is going to move. If somebody says anything, a question is answered, or usually there's going to be a piece of news or information that we are not going to be able to read through here, and it's going to pop out, and they're going to explain something in the conference call which will make the stock go up or down. And teaching me economics. I'm not as much because I'm driving, but definitely learning a lot. Awesome, man. All right, guys. Well, we're going to have this call here in 15 minutes. I should make food. You know, maybe we should turn it on in 15 minutes. There's a lot. I think we've covered a lot, really. I think you guys here in this hour have gotten now. You guys should be caught up to speed with what's going on with Netflix, what happened. There is going to be probably some stuff intermittent that's in and out. But in this last hour, we've covered a lot of things that, you know, you guys are going to see now how hopefully you understand why investors are reacting this way. What's the potential? But now, hopefully, one of the main things I want you guys to understand, this stock isn't going to stay here until we hear this conference call, and then where it's going to open at in the morning is different. And now when you guys are trading, day trading, trying to find plays on this, you got to put that in a perspective. But also, do you see how even if you wanted to day trade, even if you wanted to play the option, having an understanding of the fundamental in the company plays such an important role? I know you guys always ask me how I find these plays, how I make it, what do I look for? This is the stuff that I'm looking for, and hopefully it makes sense why I'm looking at that, because think about this type of stuff and think about how important it is to the company and what it could give you with, you know, insight. And I know if some of these factors change, what factors when they change, when information comes out, you know, you could learn a lot more about it. Of course, man. Did you share it? That's what I'm gonna ask you. Did you post this on your Instagram? Did you tag me on your Facebook? Have you know, that's the real question that we got to look into. If you guys like this, make sure you subscribe, obviously. I think most of you are subscribed if you're in here, so let's get this thing active. I have to deal with an Airbnb guest. I don't really recommend books for options. I recommend Understanding Money. Again, Richest Man in Babylon is one of the best. And then if you really want to learn about just stocks, because again, think about all this stuff I told you guys. You know, everything we've covered so far, what I understand about Netflix, how things are going, this isn't going to do anything for you. You find the play based on, you find the options play based on understanding the stock, you see. So this is coming into what stock is good to play and understanding and analyzing it. I believe the contract will go up, and we could see a 5% jump at open. That's possible, and that's what I was talking about, that you never know. That's why I say the stock's not going to sit here. What did you do, Peter? Did you short it? How did you play it? And give me some more questions in here. Give me 1 second. I'm going to go let Jackson inside. Ooh. Nice. No questions by the time I went down? You trade stocks, Russell? Amazon's moving after hours. Interesting. You guys know today's Prime Day and they had glitches? $10 minutes. Yeah, I couldn't buy anything. And if I only investor go over real estate because this son of a bitch is too huge to be only about stocks. No, I don't think he covers real. I think somewhat. Well, that's the thing. He talks about making smart investments, and from there, you could go in from there and do, go do that. Currently holding 4 shares. I jumped in just for the thrill, honestly. I was going to get 2 weeks short. To get a 2 week short, but the cheapest I could find have cost $1,500. That was something I didn't want to risk. Wait, so you just bought shares? Do you know anything about options, Peter? And again, I would paper trade for sure. I don't know if you guys have seen Thinkorswim. You could do paper trading on there, practice, but you want to be careful. I'll tell you a story. In 2014, it was the last time Netflix dropped like this. I remember I bought like $100,000 worth of Netflix right before earnings, and I sold it out. And then right after they reported, oh my God, it got crushed. I would have lost like 50, 60 grand or something. It was nutty. That was, I think a good trade would be for you to trade $1 and make as much money as you can with it in a week. I don't think I can. There's commissions, when it comes down to trading. There's commissions you got to pay. So I couldn't even make a trade. I could buy I bought $1 contracts before, but after commissions, it's pretty much like $6. But that's funny. There you go. Russ mentioned me in his story. Now we're talking. There you go. Look at, man. Look at that. Everybody, make sure you're subscribed if you're new. I see some new names in here. We're going to have this call in 7 minutes. I'm excited to go over it. I'm excited to see where Netflix went. So if you guys are new, make sure you subscribe if you like this stuff. Drop a question in the chat so we could talk about this. I think that's going to be really exciting as always. And even then, share this on Facebook, your social media, whatever. But I think even then, as this call, it's going to start getting active. And we're going to analyze their conference call and go over this stuff, I need to shout you out more. I know, man. You're asking me to teach you economics and all this, and this is the first time you shout me out, man. I see how it is. But like we're going to talk about, Josh answers, Timothy Sykes. Oh, man, don't even make that a comparison, man. We're talking real money here. We're talking real stocks. But hopefully you guys see. Is there any questions we haven't covered so far relating to why Netflix has dropped this much? And I guess maybe we should discuss what we're going to be looking in this conference call. I want to know the reason, and this is what other investors are going to want to know. People are going to want to know why the stock is dropped. They want to know why Netflix had the estimates. They want to know more on Netflix future estimates and see where the company's saying, and then also content. But I do, like I said, when we pull up the Netflix filing and you see their estimates, for me, the thing that's really got me interested, to say the least, is this dot plot. Just seeing that, hey, take a look. The green dots is where they reported. They're coming down, up. If you drew a trend line for this and you were trying to see, hey, where are these guys actually reporting it? You're getting spikes up in growth in areas, but we're overall not seeing sustainable growth. What happened to that Octagon match? He backed out, man. You don't want to fight Josh Answers, bro. What are you talking about? Is you stupid? You big dummy? No. Let's see. So Lost in Space, which were renewed for another season. 13 Reasons Why, Santa Clarita Diet series. I kind of want to watch all these. Marvel's, dude. See, so this is good. Netflix owns these contents. Have you guys ever seen Jessica Jones or any of the Marvel? Luke Cage, that's my favorite one. Ramp up production of non-English originals. Again, this is what I was talking about, when we looked at their foreign and international growth numbers. Like I said, how many of you guys have noticed on your Netflix how many non-English titles there are on it, Think about how many non-English movies you will find on Netflix, and this is the reason why, so that they could grow it. So that's kind of annoying for me as an American, but hey, good for the company and as an investor. I like the consistency of your YouTube. Thanks, man. I appreciate it. We got I think it's cool. I like seeing the questions I get. I think some people really want to learn, and I think if we could build up a cool network, the goal is to build a nice network of investors, entrepreneurs, people involved in business at any aspect. That's why I'm saying the trading fraternity goes beyond just stocks. So hopefully you guys see that and you guys are a part of it and have a good source and do everything the right way. We need more live on YouTube. All right, man. That's on you, bro. You got to spread the word. That's all on all of you guys. I'll do my job, you do your job. $4 minutes, so 4 minutes till we got the call. I'll have it up like this so you guys could see the stock and the call. Come on. I'm getting impatient, but we're going to see kind of where everything goes from here. So you guys are coming in. I'm telling you, it is exciting, but now as a trader, again, I wouldn't be trading this after hours if I were you guys, because you guys are going to see, it's volatile after the report comes out, but then during the conference call, you never know what's going to happen. Essentially, people are going to come in at any time, and you never know what phrase is going to trigger it. It's a mix of, there's a transcript, you have algorithms, and people are listening in on it, and they're making buy and sell orders on it, and at the same time, you got to see it's going to be volatile. And like I said, and I like what I think Paul or Peter said earlier, you don't know where the stock is going to be. It could end up higher. It could end up, like I said, it's either going to drop below this 340, how much, I don't know, or it's probably going to end at like 370 to 380 after people kind of get a background explanation on what's going on with the stock and why they reported like this. Why did they bring their expectations down? Why did they miss their expectations? And seeing too, again, those are the two big factors, but we also want to see what management says on how they're going to spend their money. Because like I told you earlier, Netflix spends about $7 billion a year just to create content. Even when these are the titles that they're bragging about, and they're talking about what they've accomplished and all this other stuff, but that costs them money. And like we said, at the end of the day, these guys are not making money. So they are making money, but they're spending it. So what I mean by that is there's no real net profit. They're not returning money back to investors, but then it's saying, why is the company at such a high price? Because think about it. People are buying in for that expectation. That's why, again, like we said, the amount of members that they add is so crucial, because again, they get to 100, imagine 100 million people, times that by $10 a month. That's $1 billion a month. So that's what they're shooting for. And now, what total members, I think, let's see, total members are so it's like 130 million. So they're already there. They're already making a ton. So you got to put it into perspective of what needs to be accomplished, how they're going to accomplish it, and what they're looking to do. So that's what we're going to be looking for on the conference call. It's going to start right now, I think. So let's see where it's at. Come on, are you kidding? Give it 1 minute. See, they're not early like that. So again, what I'm going to do is put up the stock so we could take a look. I'll play it over my speakers. If you guys tell me how it sounds, if you guys want to hear it on your own, you could just go to ir.netflix or even just go on YouTube It's going to sit right in there. 3 p.m. Come on. Netflix earning call. Come on. How come I'm on here and the actual Netflix isn't on here? That's kind of crazy. So give it some time. If they are late, that's something that happens sometimes, but I would be surprised if they're late being down this much. And that's the thing. Take a note. The longer we wait, or the longer Netflix isn't up, you will see investors react again, and that's happened many times before. Please tell me you're posting a recording of this. Well, we've been on here for an hour. We talked about a lot. Give me some questions, and we'll definitely have a recording. There's a lot we need to go over with this. So it's 3 o'clock right now. It's 3:01. The video, again, you guys see I'm there. No. Oh, my gosh. I know. And isn't it funny, how impatient we're getting, but this is the stock market. This is what you understand, this is how fast the stock dropped in 1-2 minutes. So they need to get that report and see, we want to see, but like we're saying, it's edging up. Investors are kind of cooling off, and in the volume, you could tell even with the volume, there's not a lot of trading because people want to see what's going to happen. They want to know what Netflix is going to say. I'm just literally just going to keep clicking this till we find it. There you go, 1 minute ago. Perfect.
Good afternoon and welcome to the Netflix Q2 2018 earnings interview. I'm Spencer Wong, VP of IR and Corporate Development.
Do you guys like it? Do you guys hear this?
CEO Reed Hastings, CFO David Wells, Chief Content Officer Ted Sarandos, and Chief Product Officer Greg Peters. Our interviewer this quarter is Todd Younger from Bernstein. As a reminder, we will be making forward-looking statements and actual results may vary.
Well, that's what I'll do. I'll give my commentary. I want to make sure it doesn't get too in the way of what you guys are saying.
Spencer. So let's start with the obvious. So for the first time in, I think, 5 quarters, net additions came in below your own forecast, both in the U.S. and internationally. So
this is a question they're receiving.
Maybe you can help us walk through.
So now they're pretty much trying to answer why, again, net additions have gone down so much.
Todd. So in general, I would say acquisition, which is up year on year, but wasn't up as much as we thought it was going to be. So, and it was pretty broad across multiple markets. It wasn't any one area of the world. And as you pointed out, after 4 consecutive quarters of under forecasting the business, we over forecasted the business. And, we strive for accuracy. We clearly didn't pad the number. But we think based on the rolling 12 months of growth that we've had,
the kicker
compared to the prior,
I'm waiting. Get to the fucking point.
The U.S. up slightly, internationally up significantly. That the background and underlying characteristics of the business haven't changed. Our total addressable market is intact and hasn't really changed based on.
So again, you can see the stock. He's not as it's the best part.
General,
as he doesn't answer the question or gives a good reason, you're gonna see what happens.
People are loving it. People are adopting Netflix around the world, increasingly more in our newer markets as well. And so I think we're still on track for a strong growth year this year, and maybe it's going to come in a little bit differently than we expected and others expected.
And Todd, you notice probably that paid net ads are up.
Is that better?
Compared to a year ago, and forecast to be up on a year-over basis in Q3. And the fundamentals have never been stronger. Our viewing is setting year-over-year records, the shows that we have coming. So we're feeling very strong about the business.
Terrific. I'll stay on this for just a couple more follow-ups, and then we'll move on to broader things. Just wonder, over the course of the winter, there were some well-publicized, essentially global pricing increases. I wonder if you think that had any impact on either retention or gross ads relative to your forecast.
We don't think so, Todd. I mean, if anything, we all of 2017, we sort of had rolling increases in various different parts of the world. We were able to grow continually through that, and we continue to. So I don't think that is contributing.
So it's pretty much really what they've talked about so far.
Movie of Q2 shortfall before.
Yeah, see this. This is what I was telling you guys earlier. I want to hear this.
And we never did find the explanation of that, other than there's some lumpiness in the business, and continued to perform after that.
So they're pretty much trying to bring it back. Remember, we looked over the filing.
Or else I wouldn't be doing my job. So,
Q2's down. They're saying there's no real. They just over forecasted. I don't want to talk too much because I want to hear what's being said.
I only had a quick chance, so I think that's, I don't know if that's on paid or total or both.
It's
on total.
It's not
Todd,
live.
so as
Usually
you
they
pointed
do.
out,
That's a good question. They usually do it live, but it's not.
Again, we try not to focus too narrowly on like a couple 100,000, right, or on any one particular quarter. If you kind of look at Q2 and Q3, it's essentially kind of flat with last year. And last year we had sort of about 5 million global net adds in Q1, 5 million Q2, 5 million Q3, and then 8 million in Q4. Years prior,
this is what he's talking about right here.
Growth in sort of Q1 and Q4 relative to Q2, Q3, and we think that pattern is going to happen again this year. And so again, we tend to focus on 12-month rolling over 12-month rolling, not on any particular quarter.
So again, now it's dropping.
We've seen this movie before. We've been through these cycles of growth, and we think the sort of background fact of people adopting internet entertainment, including increasingly more international adoption, is going to drive really strong year-on-year growth in international, with U.S. hanging out in that 4 to 5 million, net additions band that it has been for the last 4 or 5 years.
So that.
All right, one final sort of segue.
This isn't live, so we could skip through it. Maybe we could even pause, but maybe we'll do that. I could pause it here. If you guys hear what he said, and again, you could see, based on how long this earnings report's been out, the stock, he just said, U.S. isn't going to go that much, It ain't live. The conference is already baked in. Not at all. You have 38 minutes. Again, notice, people just have to do the same thing, Chippy, People have to listen to this. So it doesn't matter if it's baked in or anything. You have to put that, again, if that was the case, you wouldn't see drops.
No, as Reed indicated, David, I'll take it again. And
give it 38 minutes till everybody starts listening to it. You're going to get analysts talking about it, reports and everything.
We indicated we do have some foreign exchange headwinds that kind of push us towards the bottom end of that range, but everything else is sort of tracking according to our target and plan. And so again, we feel pretty good about it. I mean, obviously, when you have sort of 1 million net adds, we are going to manage within the band of marketing spend and other things to protect that operating margin growth in the short term, but long term, nothing's really changed.
Don't worry, Greg and Ted, I've got plenty for you. But moving to the other elephant that was already in the room. Just checking a bit on the competitive landscape. Obviously, a lot going on between Disney and Comcast and Fox and Sky. So need to check in and hear what you're thinking in terms of what impact on Netflix, however that result turns out.
So I'm trying to see if any news pops up.
Better or worse for your own competitive force.
Because again, we're not the only ones listening to this. There's other people who are listening to this, and as it takes more time, they're going to start, you'll see some reaction. So do I think it's baked in yet? Not at all.
So that's all normal and expected. So it is what it is. We're not going to be able to change it. And
take a look at even just the volume picking up as people are getting more information on this.
The best user interface, the best recommendations, the best marketing, all the things that we've been doing for many years in the past and will keep doing for many years in the future.
And the other thing I would add to that, Todd, is the market for entertainment is so big that there can be multiple firms that are successful. So you've heard us talk in the past about how we've been able to grow dramatically in the U.S. and HBO and other networks have also similarly been able to grow at the same time. So it's a very large market.
And in our programming, we've always been focused on keeping people entertained and satisfied on an absolute basis, not relative to any consumer. So we're just trying to, or any competitor. So really are by keeping an eye on our members and our consumers, we're better served than hyper-focusing on competition.
So one of the most frequent sort of investor questions related to this topic is access to content, licensed content, particularly from Disney and Fox. Let me start with this very specific one. There is a wide variance in degree of opinion.
So that question is what we talked about with how are they going to buy this stuff, how much they're spending to get titles, how much they're getting to create titles, all that stuff.
That down for investors, Andy, and give us some sense of just both from a availability perspective and maybe from a viewership perspective, how much is there?
No, I don't want to narrow it down any more than it is, but I would tell you that it's been a number that's been on the decline for several years. You should think about it, the way we've looked at this long term is that our competitors will want that content on their own services. That was a bet we made a long time ago when we got into original programming. And every year since that, we've been doing less and less off-net business with Disney and Fox. And our bet is that long term, they'll want all their content on their service. In the short to medium term, we're still licensing content off-net from them. And they're also producing original content for us, like Nurse Ratched from Fox or the Marvel series from Disney.
Right. I know you've answered this question, Ted, I think the last 2 or 3 quarters consecutively, but I got to ask it again. Any reason to expect those types of sort of original shows that you get from Disney and Fox to change given the new information from what they're doing?
No, those shows are for us to cancel. But we're super happy with the performance of them so far. So, and the Nurse Ratched and some other Fox original titles are still upcoming.
So speaking of your own originals, I want to touch on a couple of sort of relatively newer areas of focus for you and just check and see how it's going. So
hopefully you guys see right away.
And you talked about this last quarter. It's been
I want to hear what he says here, but
elevated higher.
Wait, hold on.
Priority for you guys? How's that going? What's your experience?
So now they're talking about the main thing. So we're gonna see what happens in the rest of this and how investors respond. But you see in the first 9-10 minutes, they answered, Netflix. Join the YouTube Live, Bergs. We're talking about this. That's the thing now, that the big difference in the first 9 minutes, they answered the main questions. And that was, why did they miss the expectations? What do they think about the United States growth? What do you think about the international growth? And where do they expect, the content questions, how much money they're going to spend, all that. That's what they're really looking for. And, the next questions, they might not have as much determination until they start talking about now future expectations that they're going to have. So this is a very interesting topic so far with it. And again, this is going to affect the other earnings coming up and the other plays, but we'll keep listening to this.
Movies that people want to watch. So we saw in the letter, we talked a little bit about the results of our romantic comedy Kissing Booth. There was much made in the press this summer about our romantic comedies have all been pretty successful, set it up just after Kissing Booth. And
again, too, they're going to talk about these titles that they have and talk about it is important. But again, they have addressed the biggest factors, I would say. But the rest of this is kind of additional.
And we're really excited with the way they've been delivering in terms of viewership. And we think that we'll see similar trends that we saw in television, but it'll take another year or so as we get into it.
One final one I wanted to check in on, which will allow us to move forward here, was what I'll call non-English language, for lack of a better word. It seems like you're making more stuff in other places of the world. It seems like that's having success all around the globe. I wonder if you could.
This is really important.
Talk about your own assessment of the returns you're getting on those sorts of program investments.
Yeah, similarly, fast ramp up and early success. So we've been producing shows that are incredibly relevant in their home territories. And the nice windfall is they get viewed all over the world. So we saw that recently with Rain and Dark. We certainly, in India, we saw great success recently with Sacred Games. That people really excite the market. And these are places where our global originals play well too. So it's really, I think, accelerating the brand perception of Netflix as not just an out-of-towner, but someone who's producing content that you care about in every part of the world. Upcoming this year, we have new seasons of Chicas de Cable from Spain, Ingobernable from Mexico. We have a new show from Spain called Elite coming out next in Q3. Ghoul in India coming out in August. And these are shows that are produced at a level that are really high that consumers get really excited about, and it helps them get really excited about Netflix if they're not quite sure who we are yet.
So now that we've moved on outside of U.S. or the English Western world, can I check in just a little bit, specifically on Asia, and carve out India for a second, because I'm going to come to India.
So something's happening, probably it was said a minute or two before, but now you're seeing volume pick up interest. And again, they're talking India and Asia, those two big markets that we talked about earlier. That's where the big growth is going to come.
Find the exact right formula. how's your growth going in Asia generally? What is driving it? Is it at a similar pace, at the same stage to other markets in the world? Any deeper info you can give us on that part of the world? Anybody?
Reed, what is it?
Just
Sure.
go to my YouTube. It should be on
And,
there if you
I'd say,
just
Todd, we're
YouTube the
starting
trading
to turn the
fraternity.
corner in many of the nations where our viewing is climbing up as we're continuing to improve the programming. And when we get high viewing in every other market, that has brought in an era of fast growth. And so we've seen that. It's very country by country. I'll include India in the description and say, we're really pleased with the progress and tracking we're making since we launched 2.5 years ago. And we just have a lot of work and a lot of opportunity ahead.
And Todd, the only annotation I would say is, look, it's still early. We launched with a very sort of a skim model approach, and we've augmented that, right? We're adding payment methods, we're adding more content. We are working on all the playbook that has been successful for us in other markets in the world. And you see that through increased investment. And so that sort of last wave of expansion for Netflix is still relatively early, and that's affecting our growth numbers. It's affecting our levels of investment as well, where other markets are sort of growing in profit. That actually, those markets collectively are growing in loss. And we have more growth in the profitable markets than we do in the loss markets. And that's what's growing the overall margin.
And we've been really thrilled with our original production of anime that's being viewed quite pan-regionally throughout Asia and of course in Japan. Our scripted series and our unscripted series like Busted from Korea or Terrace House from Japan are viewed throughout the region, which are building brands bigger and bigger.
And so thank you for sort of carving out India separately, only because for a number of reasons, right? It's such a place with huge potential. I think
Again, there's that India and Asia are really, really important when we looked at their filings and seeing how much it's been, their international growth has just came from those countries and those places.
Where you are on the growth curve there, how you see the path to success, and how big that could be for you in the next many years.
Well, Todd, we're way behind YouTube, Hotstar. Those are really the leaders on the internet. And there's so much TV viewing, that linear TV, that could be internet viewing. And the advantages are tremendous in India for internet viewing because you don't get the ad load that you see that's so high in all of the other platforms. So Netflix is having great success getting established, getting a reputation going. And with this triplet of Lust Stories, Sacred Games, and Ghoul, we're really getting some nice momentum in our India growth. Now, we're still, as David said, a niche product. We've got a long way to go to expand languages and many other aspects to be able to cover, be a broad Indian product. But in terms of
it's usually, they used to do it as a live call. And honestly, I think maybe because of what's happened so far with this earnings, they used to do it live. They used to live stream it just like here, but this one is taped. So I could pause this, I could skip through, and that's why too, someone already said this is probably baked into the earnings, and it might be to a degree, but again, it's only been out, if we refresh the page, it's only been out for about 20 minutes, but it's a 38-minute call, so then we are going to see what's going to happen through it, Unbelievable. It's interesting. It's definitely interesting the route they're taking with this. And then again, you see where the stock is at, and it would make sense why, but they are answering most of those questions.
But actually, a lot of the work that we do that helps our members in India is actually applicable in some sense globally as well, whether that's more efficient encodes to make the viewing process higher quality, start faster. That obviously is great for our members in India, but it's great for members around the world. Downloads is another great example where we rolled out downloads for when you don't have great connectivity or you don't want to use the data in your data cap. Now we've just actually rolled out the next iteration of that, smart downloads, so we can make that process even more fun and easy by having the episodes that you watched automatically delete and get replaced by new episodes whenever you come back on a Wi-Fi network. So it's a mix of both India specific and just globally relevant.
Yeah. In there, you talked about payments and just that whole stream. It's a question that comes up a lot with me, with investors. It's just the thought about the affordability of the product relative to relative incomes. That comes up a lot in India. I'm going to broaden the question to just
That's a good
various
question.
places in the
That's a
emerging
really
world.
good question.
How much room do you guys feel you have there, in India and other places? Are you,
That's
in
a
sense,
really
you're
good one.
reaching a limit
They're
in any sense
asking
in
what,
terms of
how,
utility of the
is
product
it expensive
compared to
and
alternatives
relative
and
to the
customers willing
incomes
to
of like
pay
people in
that's
India and those
affect
foreign,
retail ARPUs
can they
in line
increase
with
that?
the
And, how do they think that's going to
I
play
would
on the
say
finances?
we're far from reaching a limit in terms of the addressable market, given the pricing structures we have right now. We got a lot of room to grow in a reasonably affluent part of the society in India and other markets around the world. So much more.
Yeah,
runway.
Rachel, I think they are. I think, they're playing it with caution. Obviously, they don't want to leave it to that. The interview, this one hasn't been up for longer. No, this one right here that we're listening to, this hasn't been up for more than an hour. This has been up for literally 20 minutes. They just released it. So, they have a media embargo type thing. So
Todd, just to
we're
build
seeing a
on that
pop.
a little bit, and we're talking about India a little bit as homogenous, but breaking this apart, Reed has mentioned it, Greg's mentioned it. We may have an issue where there's 3 or 4 different sort of growth patterns within India in terms of different demographics, different segmented groups. As we address one segment and then we start addressing another, and so forth and so forth. And each one has a specific set of challenges with it. And we're in the early days of that first segment. So, expect more from us in terms of getting into segments 2, 3, and 4.
And I do think that the price point is mostly relevant to the value proposition. Are Indian consumers finding a lot to watch on Netflix and having a great time doing it? And if they are, that price point becomes more of a value proposition than a premium proposition.
Yeah, just picking up on that, one statistic that you guys sometimes mention and sometimes don't, I don't think I saw it in the press release, was the notion of engagement, and as one good, perhaps, indicator of value received by your members. Any comments on where engagement, I guess defined as hours streamed?
You have to tell me what this is. It's awesome.
Yeah,
definitely.
Still growing.
I will go over it, Rachel. I wanted to, I know there's people in here listening. We're going to go over a bunch of the topics with it we did before. I'll put up the replay of this too. So just make sure you're subscribed. You can check it out.
Is growing. So we're super excited about that. And, we're still a small fraction of every society's overall viewing. So I think there's still room to go there.
Got it. One more on pricing, just because I know you're always testing. We all know that, but one of your tests got picked up in the press. We actually stumbled across it. This idea of an ultra plan seems to be a test for HDR viewing that you're
subscribe to the YouTube channel here. We have a bunch of stock videos and everything else. You could subscribe to the channel, put notifications on. You'll see this replay. We've been on here for like an hour and 50 minutes, and you can see all the other stuff too. But yeah, it is crazy what Netflix has become.
We want to test at both ends of the spectrum here and try and figure out ways to add more value for those members who might see that as being good value, while we're testing, and some more accessibility, how we create a way to access Netflix for a broader group of people. But a test that's still in progress and no results to discuss at this point.
Fair enough. So another way that you've been going to market increasingly, it seems, is with these partner deals. Maybe there's a better internal word for them, and they were mentioned again in the press in the shareholder letter. We'd love to check in on a couple things on that. So first of all, is anybody willing to tell us roughly how important these are to your net ad growth, to your overall subscriber base? Any sense of proportionality there, other than what you said in the letter, which is basically a supplemental channel, but the majority are still direct?
And I think I'd reiterate that the vast majority of our acquisition still comes, by consumers signing up directly with us. We're fairly new when it comes to these, partner bundles. We're excited and optimistic about it. So I think that will grow as a percentage of our, our acquisition. And what we're really excited about is it actually allows us to sort of more efficiently address different consumer segments. So let's take the US, for example, a market we've been, relatively well penetrated in. But doing a deal like with Comcast, it allows us to put the application on the set-top box where consumers that might be less early adopters, sort of more late adopters, are already watching traditional television. By being included in a bundle, we get to remove a separate purchase decision. We get to eliminate the sign up flow. It just makes it super simple and easy for
Have
consumers
increased their
to sign
international
up
viewers so many.
via that
Exactly.
mechanism.
And Todd, just to be
Yeah, that's what we
consistent with
talked
what we
about
said in
earlier.
prior quarters,
It's
it is a
crazy when you
growing
see how many
element of
India
our
titles
acquisition,
are on your
right? As
Netflix
we-
now.
as Greg said,
It's
as
for
we
this
penetrate
reason, so that they
into,
can make more and
demographics
get
of
more
established
international
markets
subscribers.
that, may not be on the early part of that S-curve of adoption, and also our newer emerging markets where partnerships may allow us to do things like partner billing and tap into consumer trust. That's a little bit earlier in the cycle than if we establish that ourselves.
Is there any feedback you're in a position to share from the partners themselves in terms of how these programs are working for them? Not to single out, T-Mobile comes to mind just because they've been at it in the States the longest, but any place in the world, you characterize their feedback to you?
Yeah, I think it's something that's very important to us because obviously we want a sustainable model around this where it's adding, it's valuable to the partners, perceived as valuable by them, and supporting their business so that they want to continue to invest in it and expand it. And again, market by market, it's different, but it's either a differentiation strategy where our partner is seeking to position themselves slightly differently, but oftentimes it's just actually a way of them communicating to the consumer the value that they're investing in their network or the quality of service and like that, and having Netflix when an amazing content that we
So
have.
I think it's gonna. I'm waiting to the end. I kind of want to just fast forward to the end to see what's going on. We're not seeing movements with the stock, so I'm very interested. I think what's gonna happen is how that's gonna play into the morning. And really, we're seeing it kind of break, but again, there's only that one volume spike when they started talking about India and China and the Asian growth and what they plan to do. So that's kind of the next thing I'm looking for, but I think we might not get any bombshells or anything crazy is going to change with this. So I am interested to see, but we're not. I do want to skip. How many of you guys who wants to skip through this for a minute and go ahead like 5-10 minutes? We only have 14 minutes left on it, I guess.
We've had these for many years. I think you can extrapolate from that they're successful for both parties.
And Todd, it's not a radical thing. MVPD's bundling another network, that's pretty well-trod territory on their side.
One of the things that these partnerships give to you is also some marketing investment, which is done on your behalf by them.
We're doing lots of tests, trying different methods.
Comes the world's most inelegant segue, but being respectful to your shareholders, the single most popular question I got in prep for this, so I'm going to share it with you out of duty to that. I'm sorry, it was revolving net neutrality, and so I guess we have a new administration. Relatively,
See, that's a good question because that could affect the prices relative.
World, net neutrality has won as a consumer expectation, and some countries have net neutrality laws, other countries don't. But broadly around the world, consumers have the expectation and ISPs are delivering it. So I would say the net neutrality advocates have won the day in terms of those.
Who produces a lot of content, prolific and successful, is actually.
Just need to check in and make sure we understand your logic and your continued ability or plan to finance the company in the future deficits for the next few years.
Yeah, I mean, we continue to see debt as the most optimal choice, the most cost-effective use of capital, source of capital for the company. Obviously, we'd love to get to that point where we're organically and self-funding content, and we do see a point where we can get there. But until we do, we see debt as the right choice.
So that was, again, they're talking about that. That's a big issue, the debt thing. They're pretty much saying they plan to lose money continually moving forward.
Time is up. So here was another one, and probably for either Ted or Reed, you guys get this a lot. Investors still want to know your desire or appetite for sports type of content rights.
That's a good question.
News-oriented type of content is really, okay, you got about 130 million global members now.
Smart investment for us on the content side. We want to invest in product and marketing to make the whole service better, to make the shows be more aware. But we also want to steadily increase operating margin over the next several years. And so, as an example, we've got some adjustments to make because of foreign exchange rates. And, we'll make those adjustments and we'll grow into that. So think of us as, continuing every year to figure out how we make certain adjustments to keep the operating margins growing, the subscriber base and revenue growing. And that's been a basic way we've been operating over the last several years. So it's more of the same. And in terms of the dartboard, several years out on when we double, the answer is not soon enough. We're always pushing hard to figure out how can we get even more growth.
Better about the product, I'll just sort of trying to make people very happy. And it's hard for us.
And then for me, and I'll let Reed have the honor of going wrapping us up, but I would say we've got 130 million members, and the prospect.
So here are their closing statements.
Whatever that is, 104 million, 130, the next 130 million. All of those folks enjoy connectedness, and as we grow to enjoy more stories that are sourced from.
There is a weird tone on this earnings.
I think the ability for all those folks, or a great portion of those folks, to enjoy and see a story and discuss that story, in the same moment is great. And Netflix being an enabler of that will continue to do that. And I look forward to the 8 billion of content growing from here. We think we can grow operating margin, but we're also going to grow content spend, which will enable more of that content.
This has been an interesting call, though.
And Todd, for me, it's about connecting the world and sharing the stories all around the world. I think we've got so much more we can do with that as we learn the various arts of dubbing and style, and I think that will make a really profound contribution to the world, in addition to just entertaining everyone, which is
whether to own this.
With that, let me thank everyone for participating.
All right,
in the
Instagram.
And
everybody come to the YouTube. We're going to talk about this now. So that was the call. I think it was interesting to say the least, and it does bring up a lot of big things. They answer what we were talking about with growth and all that, but now you guys you see the tone. The stock didn't move. It was pre-taped. It wasn't live like they usually do it. And it was like that for a reason. And, think about what's going on. All they said was like, because again, let's pull up their filings. Let's pull up the estimate. You guys could see kind of what they were. Where is it? So what they were talking about in terms of, what is this? There it is. Wait, no, which one am I? This. Their estimates, they said they didn't explain anything except for saying, hey, we missed our estimate. That's the same thing that happened in Q2 of 2016. They said they had no explanation for it. There was no real reason why, except they even said, we don't know why that happened in 26. It's just a lump in our market. But they tried to, they alluded to the fact, regardless, we messed up our Q2 again, but we went up from there and we kept growing from there. And now, think about the tone they took and why they took that. The stock's already down 15%. It's already down. They said enough to where they're not going to move the stock greatly. They didn't want to say too much. They answered the questions very neutral. And, it just, given what's going on with the whole thing in general, you could see why, So they couldn't explain it why, but they just said everything's as good as it is, what would you expect them to say? Can we assume that they're going to do bad? I don't know, and Rachel, no, you're adding good thoughts. These are the questions you want to ask for the company. I think they're playing the middle. We can't say anything beyond that. The only bad part I could take out of this was they missed the estimates, which is why everyone's responded. They lowered their guidance for the next quarter. However, what does it say about, and they even talked about, we see what they're doing with Asia, we see what they're doing with India, how foreign exchange and the dollar is going to affect their earnings, but they kept it very neutral, and I think that was smart of them. They didn't try to defend it, which would have tried to bring the stock up, but also at the same time could have brought the stock down. So it kind of makes sense what they did, why they did it, and hopefully you guys could kind of understand some of this stuff. So if you have questions on it, again, let me know, put them in the chat. We've already talked about the main points of, how to read this this report, analyzing it and seeing, what really everything that they've just discussed, the real meanings behind this earnings call, and also why the stock did what it did. He even said United States growth is about it's going to stay where it's at. They're trying to get more international growth, and that's what happened. But the conference call was pretty uneventful. And you guys see, you know, a lot of stocks like this Elon Musk's calls are way more eventful if you want to put it into that context. But at the end of the day, this was simply they overestimated, they missed the estimates. They're, you know, again, what you could have taken out of it that could have been a real bombshell to justify the stock going down even more is even if they said that, hey, you know, we missed estimates because of this reason, because we're seeing slowdown here, we're seeing us capped out, but they didn't give any indication of that. They lowered their estimates for next quarter, maybe to help them control the price and sandbag it and get up higher from there. But other than that, it was pretty straightforward, you know, so there wasn't too much that was, you know, I guess crazy in this, even though we see a crazy price move. And then I guess the uneventful part, we didn't get to see the stock move off of it, but again, that's kind of good. And now the next question is going to be, where is the stock going to be? You know, the call, it's been about 30 minutes now since this has got out. You know, the next question is how are other analysts and reporters going to react to this and see where it goes in the morning, and then the other stocks it's going to affect. But with this being the first company of earnings season and what's going on, there's going to be a lot of, you know, interesting effects on the market, but they didn't give any hints as to economic slowdown, something wrong with their business. But then again, it does leave the question of, okay, they just suck at quarter two. Some companies are like that seasonally, but Netflix wasn't always like that. You know, they have quarter twos where they actually did 5 million members in quarter two. Even though they did that many now, it brings up the issue of they're one of their biggest misses. And this is with Netflix. This is the biggest drop. This is the biggest miss and the biggest estimate surprise since 2014. So it's been 4 years since we've seen Netflix drop like this, seen Netflix make an estimate like that and come down. So it does bring up a lot of interesting factors with what's going on in the company. So that was that. If you guys have questions, I'll sit here and I'll answer them. We'll wrap it up. If you guys want to know what we were talking about with it, any questions about the earnings call, let me know. If you guys aren't subscribed, subscribe to the channel. I'll have a replay of this so you guys could do it. You know, definitely, I think there's a lot of new people here, so definitely subscribe and we'll stay in touch. But I'll sit here for a couple minutes and answer some questions, and then I'm going to head out. But give me the questions you guys got. Some of you are pretty active. What do you guys think? Give me your interpretation, everything. Very interesting, though. I'm surprised the stock didn't move. That's kind of good, though. It's good. It didn't create anything too crazy. Nothing too bad, but so we'll see. I think Netflix will bring down the market in a few days, and it will be okay, and everyone will just realize the price was exactly where are you heading. I got to go do some real estate work now. Got to make some phone calls. Got to go look at a property. All hyped up. Too much trading. Other competition arising. Quantity of content. Emmy nominations. Not. And I don't like how they focus so much on, you know, the titles. They spend a lot of money on it, and you know they're waving Emmy nominations around as flag. You know, it's not going to make money except for maybe it shows demand for a particular title or series. But even then, I'm glad it didn't move. I have 350 puts. Nice, man. Those are going to be some good puts. How much did you buy them for? We'll go down more tomorrow. Oh, we got Rachel's in. She's in it, man. She doesn't like Netflix. She's ready to kill this shit. She said, nope, that's done. It's gone. Mm-hmm. 158. Man, that's expensive. That is, I don't know if that's a lotto, man. That's expensive, but you go. It worked, so congrats. But all right, I'm gonna wrap it up there. I'm gonna get going, you guys. You don't know how to trade options? Go through my videos. We got a lot. Come on for the next live stream. Ask me some questions. You know, make sure you're subscribed so you can see the videos. And I'm even gonna drop a free options trading course. So make sure you guys are subscribed to the channel. Who are you? Who's talking? I'm Josh Answers. You'll see. Go through the rest of my videos. You'll find out. Much love. Glad you guys were coming here, and I love you. Peace out.